Hey all, welcome to ShareTreck. This is Raj here. Friends, today we are diving into BEAM Therapeutics, a stock that has made a significant move recently, but is now retracing. I'll be providing both updates and analyzing the price charts. With that said, let's get started. Welcome back, friends. Setting the stage. I believe CRISPR Therapeutics is on a stable trajectory post Casgevy approval. To support this, let's glance at its price chart, which acts as a benchmark for my analysis for BEAM Therapeutics and any other company that I'll talk about. So here we are in the price chart for CRISPR Therapeutics. Each of these candles is a one-day candle. And you can see that CRISPR Therapeutics took off somewhere around 15th of November. That is out here with this small candle. And it started to move up and then became consolidating its base. I think BEAM also followed a similar trajectory, but its jump was not as much. And it started moving sideways and consolidating, and then it fell into a bear trap. And very recently, somewhere around the 29th of January, it had a huge spike. It jumped out of this long-term bear channel. Not only did it cross the bear channel resistance, but also crossed a horizontal resistance that was at around 25.12 at that time. Opened the day, just went up, briefly dropped down, and then had a very huge candle out here. And the prices kept going up, and it closed the day at somewhere around 28.84. So that's a huge jump, and that's what I am investigating right now. So that's the context. And if you look at a company like CRISPR, for example, it's now consolidated and it's building a base for going up. And the reason is that they have monetized Casgevy, and now they have become a revenue producing company. And that kind of reduces the volatility on the stock to a good extent. And before they had monetized Casgevy, you can see they were all over the place, moving wildly. It's very, very difficult to estimate what could be the price. Now we have some basis for valuation and hence pricing. And this is where I think BEAM has to go. Otherwise, BEAM will continue to move around until it monetizes its product. So that's the point that I wanted to make here. And the other point that I want to make is that right now we are in the BEAM therapy chart, and you can see the RSI has been all over the place for BEAM Therapeutics. Even now, it's been below the 50% mark for most of the time, then spiked up and then came down again, went up, and it's on the process of coming down again. So it's been all over the place. But now if you look at CRISPR Therapeutics, after the approval of Casgevy, it has been steady around the 50% mark because the market is now waiting for the financial information, how much money is coming out of Casgevy, what is that 40% share, what is CRISPR Therapeutics EPS going to look like going forward, so that they can build a foundation for valuation and then move from there and start factoring in the CTX and the VCTX series of therapies which are in advanced stages of clinical trial. So you can see the RSI also demonstrates a little bit of rationality and stability, which we don't have in companies like BEAM, or for that matter, let us look at another company, let us say Editas. Where is Editas? Editas is also similar kind of a company. How come I don't see Editas here? Yeah, here it is. So Editas also, you can see it's all over the place, swinging wildly from top to bottom. So these are the chart characteristics of a more mature company. And slowly and steadily, all the companies will get into this kind of a situation. And that's the point I wanted to make with this price chart to address our very first point of inquiry for BEAM Therapeutics, which is why did we have this huge spike here? Okay. Well, a bit of digging around helped me find out that the sharp jump that we saw on BEAM Therapeutics on 29th of January 2024 coincides with a JP Morgan Chase upgraded report to its clients, upgrading BEAM's price target from $38 to $40 on the morning of 29th of January. This upgrade followed BEAM's presentation at JP Morgan 24 and discussions that their analysts had with senior executives about BEAM's 302 targeting E342K mutation for alpha-1 antitrypsin deficiency. And this is for BEAM 302. And one thing we should note is that BEAM 302 is still in the IND-enabling stage, which means it has not yet gone into clinical trial. It's got the application in place. Once it is approved, and then it will start the phase 1/2 clinical trial. So while examining BEAM's pipeline, let me show you the pipeline while I talk. While examining BEAM's pipeline, my focus narrows down to BEAM 101 for sickle cell disease and TDT, which is in advanced clinical trials. Though facing tough competition from CRISPR and Bluebird, but they have some good things going for them, which will probably make them best of class. I'll talk about that later in the video. And the other place where my focus goes on to is BEAM 201, which is targeting acute myeloid leukemia, and it's also in advanced clinical trials. So those are the two things I look at. However, in the October time frame, somewhere around October 2023, we had reports that BEAM laid off over 100 employees, around 20% of their staff. The company then announced a focus on 3 indications. The first one was BEAM 101 for sickle cell disease, and the second one was for BEAM 302 for antitrypsin deficiency. This is in the IND-enabling stage. This is where I was a bit concerned about how the focus has gone into antitrypsin. Whereas the third area of focus that they announced was BEAM 301 for glycogen storage disease, which is also in IND-enabling stage. And curiously, BEAM 201, according to them, is going to be handled with an external partner. I'll talk about that later, but I want to give you a critical point about sickle cell disease before I forget for BEAM 101. So a critical point to note is that their engineered stem cell antibody paired evasion or ESCAPE conditioning platform is very important. If it succeeds, then BEAM 101 could become the class-leading gene therapy for sickle cell disease because the conditioning will be gentle and it will be way superior to what the other 2 therapies are using. But one should also remember that CRISPR Therapeutics is also trying to develop its own conditioning agent, and if that succeeds, CRISPR Therapeutics will be able to level the playing field. But BEAM is already on the track right now. So that's something I wanted to let you know before I forget. Now coming back to BEAM 201, BEAM is now searching for a partner for BEAM 201, and the company is developing data sets to attract one. So they are going to market BEAM 201 for a partner who can sign up with them, share the cost, share the revenue, etc., etc. And after doing all of these, the company says that their restructuring, which originally aimed to extend the cash runway until 2026, will last longer because the latest update that they gave on January 8, 2024, reports $1.02 billion in cash as of December 31, 2023. And the report also says that the cash runway is now expected to last until 2027. So this is a big improvement. And here are the key catalysts in 2024. First one is BEAM 101 Beacon trial data that might surface in the second half of this year. And then we have BEAM 302, which aims for a clinical trial application submission to European trial authorities before June of this year, which means that in the second half of the year, we may probably get that approval out there. So submission and approval both will be separate catalysts. And BEAM 301's IND application submission is expected in the first half of this year, and approval might probably come in the third quarter. So those are the catalysts. And each of these catalysts have a potential to spike the price chart momentarily, and then it will come down. So remember that for companies like BEAM Therapeutics, remember what I showed you with the RSI, it goes all over the place. So it's all sentiment based, and sentiments can change on a dime. And in this era of medical revolution, BEAM's restructuring and developments are integral. And I think we should remember that the genomic sector is a high-risk sector requiring proper diversification and risk management, especially for retail investors in gene companies which don't have a monetized product. Just take a look at this analyst rating. Let me show you a spreadsheet that I have compiled just for BEAM's analyst ratings over the last 4 months so that you can understand how difficult it is to price such companies. As you can see in this chart that I'm showing you here, we have various analysts who have been predicting the target price for BEAM to their clients. And these reports get leaked out, and then the market also responds to it. And some of the clients of these guys are all high net worth guys who are moving lots of monies around. So it moves the market, what they say. So first of all, if you look at 20th October 2023, Leerling Partners said target price is 20. And at the same time, on 31st October, William Blair says outperform, whereas Leerling said market perform. And William Blair did not give any price target. And then on 8th of December, just 2 months after that, Jefferies Financial says hold. And previously they had said buy, but their price target is $30. And then we have Bank of America on 15th December, just 7 days apart, who said neutral, and previously they were on buy. And their price target was $35. So that is $5 more than Jefferies. And then we have SVB Leerlink again on 20th of October 2023 with market perform. And previously they had outperformed, so they stepped down a little bit, and their price target was 20. I think this is the same thing I mentioned earlier. SVB Leerlink is the same. Sorry for the duplication. And then the latest is JP Morgan Chase on 29th of January 2024, giving a overweight performance over and above what they had before. Earlier it was neutral, and now it is overweight performance rating for BEAM Therapeutics. And the price target they have given is $40. And this $40 is the latest thing that moved the needle and spiked up the price for BEAM Therapeutics. So those are the dynamics that are happening under the hood, and we see the price charts and things are moving. And every time if we start investigating, I think at the root of it would be some analysts saying either upgrade or downgrade or improve the price target or something like that. This is where I would like to point out once again the thing that I keep on telling in most of my videos. There are two aspects to each company. One is valuation. Some people call it the intrinsic value. People use different methodologies to find out what is the actual value of a company. The value of a company doesn't make any sense to me because the value is at a spot or point in time, whereas pricing is more dynamic. Pricing is what somebody would be willing to pay for a company. And pricing keeps on changing in the market based on the millions of people who are trading in the market on a daily basis. Each one is looking at a different analyst's report. Each one is coming with a different logic. Some people are fanboys of certain companies. There are companies like Palantir, Tesla, Apple who have got fans. They would disregard everything else and just they're always optimistic and bullish about the company. So in those companies, any kind of analyst report does not make much of a change. And then there are star analysts like Dan Ives and Tom Lee. When those guys and Cathy Woods, when they start saying something, the market is moved along with them. So there are various aspects that move the market, and the consolidation of all these different forces is the price that you see on the chart. So we as retail investors are literally gambling in this market because fundamental analysis is not going to give any results because the market does not regard anything on fundamentals in the short term. In the long term, yes, we will arrive there, but in the short term, it's not going to make any sense. And it's very difficult to predict the price trajectory because you don't know who is acting on what in a given day. Because when the share price is falling rapidly, there are people who are buying. That's why the ones who are trying to sell are able to sell it. So the ones who are buying it because they think it's going to go up. And at the same time, the ones who are selling it because they think it's going to fall much more and they want to get out of it and cut their losses. So this is the situation in the market. And I want every retail investor to understand this. And remember, if you're going to invest in genomics and in a company in the genomics sector which doesn't have a monetized product, then you're going to see the volatility I showed you in the RSI. It's going to be all over the place. Suddenly people will have a lot of interest. The RSI will shoot up. Suddenly people lose interest in the company. The RSI will fall down and the price will fall down. All those violent movements can happen. So the solution is not to avoid the genomic sector, but the solution is to do a really good risk analysis. Look at your age profile, how much risk you can take. do a diversification of your portfolio to meet all your objectives. And then if you have a small portion that you want to speculate on, that you can put into genomics. This is my personal opinion, not financial advice, but one has to be careful. If you put all your money into genomics sector and you are in the stage to retire, it's a recipe for disaster. So always be careful. In this channel, we are doing genomics and artificial intelligence because we think these are two sectors for the future. And my personal portfolio has a lot of AI component, which was earlier the Magnificent Six. They are still there with me. And I have some REITs which are giving me steady dividend income. And a small portion of my portfolio is in genomics. So this is how it's all spread out for me. So do your own risk analysis, do your own diversification, decide how much you want to put in genomics, and then start picking up the stocks in genomic based on your risk appetite and the cash that is available for investment. Now, let me come to the conclusions. BEAM's recent roller coaster reflects market dynamics influenced by events like the JP Morgan 24 presentation and JP Morgan's target price upgrade, and the company's focus on key therapies, especially in their context of the Escape platform, which brings both opportunities and challenges. BEAM's financial restructuring aims to secure a stable cash runway, which has now taken it to 2027. A critical factor for its future endeavors is that its cash runway lasts longer so that it doesn't have to do equity dilution. So those are all positive aspects. The market responded. And whenever there is a catalyst, the market will push BEAM price up and then it will start falling back down again. And in terms of catalyst in 2024, here is what you can expect. The markets will respond whenever any of those catalysts that I mentioned earlier in this video happen. It will go up and then it will start coming down again. So that's going to be the trajectory. You can always skip back to the section where I spoke about the various catalysts for BEAM in 2024. Make a note in your calendar. And then you can see that around those times, I bet that the price will go up. And after that, it will start coming down again. So those are the things that I would say. And finally, as BEAM ties up a partner for BEAM 201, the deals of the partnership, what is the total value, what are the milestone payment, what is the upfront payment, all of those will also be another catalyst for BEAM Therapeutics. So we have to watch those things. So friends, this is my wholesome overview or revisit of BEAM Therapeutics. The next one I'm doing is most likely going to be Caribou Biosciences at the request of one of our subscribers. I'm also going to look at other companies that we have in our watch list. And I'll be doing something similar for the companies in our AI watch list. So look forward to seeing you also take interest in the AI watch list, because there is going to be a synergy between AI and genomics at some point of time, because AI has its use cases in a whole lot of industries, almost everywhere. And one of those is going to be genomics. And if we are looking at genomics and if we don't see the overlap anywhere, then we are missing the boat of the future, because some other genomic company somewhere that we don't know about is going to deploy AI and it's going to take a leapfrog above all the companies that we have here. So please be on the watch out. If any of you know of any genomic companies which is also leveraging AI, just put it in the comment and let me know so that I can start tracking that for you and for me. With that, my friends, I'd like to bring this video to an end. Thanks and have a great day. Bye for now.